India's steel and mining industry is evolving faster than ever. But real progress happens when ideas, technology, and leadership come together. With 10+ years of experience, Metallogic has been connecting the steel ecosystem through impactful industry platforms across Pan-India. We bring together CXOs, plant heads, innovators, and decision-makers shaping the future of steel and mining. Focused events for the steel and mining sector. Tailored, customized events designed for your business goals. Research-driven forums delivering real industry insights. Powerful product and company launches that capture attention. Because we don't just host events, we create industry brands. From brainstorming sessions to live demonstrations, we create spaces where innovation comes alive, and exhibitions that showcase the technologies shaping tomorrow. Metallogic events, connecting ideas, industry, and innovation. Join us to shape the future of steel and mining.
Stop.
India's steel and mining industry is evolving faster than ever. But real progress happens when ideas, technology, and leadership come together. With 10+ years of experience, Metallogic has been connecting the steel ecosystem through impactful industry platforms across Pan-India. We bring together CXOs, plant heads, innovators, and decision-makers shaping the future of steel and mining. Focused events for the steel and mining sector. Tailored, customized events designed for your business goals. Research-driven forums delivering real industry insights. Powerful product and company launches that capture attention. Because we don't just host events, we create industry brands. From brainstorming sessions to live demonstrations, we create spaces where innovation comes alive, and exhibitions that showcase the technologies shaping tomorrow. Metallogic events, connecting ideas, industry, and innovation. Join us to shape the future of steel and mining.
Good evening, everyone. On behalf of Metalogic Projects Management Services, I warmly welcome all our distinguished speakers, participants on webinar on iron ore and pellet markets outlook. This is our 59th webinar in our industry knowledge series. It is truly a pleasure to see such strong participation from across iron ore, mining, steel, and consulting ecosystem. For those joining us for the first time, Metalogic PMS is a research and knowledge platform focused on the steel and raw material sector. Over the past several years, we have been actively organizing industry conferences, webinars, and market intelligence initiatives that bring together policymakers, mining companies, steel producers, traders, and industry experts. Our objective is to create a neutral platform for knowledge sharing, market insights, and meaningful industry dialogues. Today's webinar is particularly important because the Indian iron ore and pellet market is undergoing a significant changes. On one hand, India's steel sector is expanding rapidly, driving higher demand for iron ore and pellets. On the other hand, global trade dynamics, evolving exports opportunities, import of specific grades, and geopolitical developments are influencing prices, logistics, and supply chain. Understanding these trends is critical for all stakeholders in the industry. This discussion also comes at a very relevant time as Metallogic is preparing to host International Iron Ore Conference on 19th of May in Goa, and also we have a Steel Technology Festival on 26th May in Delhi, which will bring together global and Indian leaders from the mining and steel industry to discuss production outlook, trade flows, logistics, and the future of iron ore market. Before we begin, I would like to inform our audience that this webinar is currently being streamed live on our YouTube channel. If you're facing any difficulty on joining on Zoom, you can watch this program on youtube.com/metallogicpms. So if you have colleagues or friends in the industry who may benefit from this discussion, please do invite them to join the live stream. Today, we have the following panelists with us: Mr. Puneet Arya, President PMAI and Managing Director and CEO of Arya Iron and Steel. We have Mr. Rajesh Gupta, Promoter, Managing Director of Lloyds Metals. We have Mr. Sashi S. Mohanty, CEO and Managing Director of SR Minmet. Mr. Sabyasachi Mohanty, former Director Operations, Director Projects Planning, and Director Exploration of Odisha Mining Corporation. We have Mr. KV Prasad, CGM Commercial of NMDC Limited. Mr. Rajiv Mehta, Partner Deloitte, and I'm your host of the program. Now we will begin our panel discussion, and let me put a slightly provocative question to begin the panel. So my first question, and it's a common question, I want to ask the panelist, India is one of the world's largest iron ore producer, yet we still import certain grades. Is this a structural gap in India's resource quality or a logistics and processing issue? I want to start the answers from Puneet ji, followed by Rajesh ji, and then the rest of the panelists. Over to you, Rajesh ji. Sorry, Puneet ji, and then Rajesh ji. Yeah.
Yeah. Good afternoon, everyone. So, Monica, while you're absolutely correct that yes, India is amongst the largest producers, and we are well sufficient and positioned to be able to have a entire supply, domestic supply for our steel demand. But unfortunately, I think certain grades are still being imported. And I think one of those reasons is that India's higher grade ores are depleting. The availability of ore, which used to be, 62, 63 Fe plus, is slowly deteriorating. The grades aren't available. And today we are getting to a level of 60, 61 Fe. And I think that is one of the reasons I feel the import is happening. And of course, more so, the import is more relevant to port-based plants rather than the other inland manufacturers. But yes, I think it is the availability of the grade which is the concern, and not the capacity or the availability of the total quantity of ore available. So only if India could be, only if all our miners could focus a little bit more on higher grade production, I think that should cover the gap of imports.
So do you agree to this, Rajesh, or you want to make a comment?
Uh,
Sir, you're on mute.
Good afternoon, everybody. First of all, congratulations to NMDC and Mr. Prasad for achieving the 50 million ton mark yesterday. It's a very big achievement. Regarding the imports of iron ore and pellet, let us break it up into two. Pellets has been imported into this country from a country called Oman, which shows zero exports of any iron ore, any pellets possible. Only India imports from Oman when they do not export. So that mystery cannot be solved by people like us, but by the right investigative agencies, that why it is coming from there. Those grades are normally higher grade of 64, 65%, and being used by the companies in the coastal regions, like including Kandla and Chennai and Goa. That's around 2 million tons was imported this year, will be imported this year, that is 26, 27. Around 8 million tons of iron ore has been imported as iron ore in iron ore form this year. Those grades are 59 to 63, different grade, different shipments, and belies the fact what Mr. Arya tried to mention, that it's only higher grade. So 59, 60 is available in the country, 55, 57 is exported from the country, 59 is imported, and I think it's a matter of a strategic reasoning behind the importers that they need to import. So that's my belief, that is not only the grade requirement, but also the strategic requirement of the importers.
I would like to take answer from Mr. Prasad and Mr. Sabyasachi Mohanty on this, because of course, you have been producing iron ore, and congratulations to Mr. Prasad on achieving
Thank
50 million ton.
Thank you. Thank
Yeah.
Thank
Yeah.
you. Thank you on behalf of NMDC, madam. We proudly announced that actually 50 million tons yesterday we achieved, madam. And secondly, madam, already Mr. Rajesh correctly said, madam, correctly said that actually only if you see the iron ore part, madam, out of 270 to 80 tons of production, only import is only 8 million. That is coming less than 5%. That also actually import was done by actually one or two customers only. That is maybe actually a strategic purpose only they made, and whatever they are importing also, that is not an high grade, only that also in the range of 60 to 63. I feel that actually in a strategic purpose only they have imported. India actually iron ore is easily available. Whatever grades they are importing, that grades are easily available.
So you are saying we have abundance of iron ore
Yes.
available. We have good grades, medium
Yes,
to high grades available.
only issue is
Still, there
logistic,
is some strategic
Yes, ma'am.
reason why the companies are importing iron ore. I would like to have a comment with from Mr. Sabyasachi Mohanty on this.
Yes, good afternoon to everybody. See, the import is not only for the low grade concern. People are importing, it is only the port-based plants are importing the iron ore. They are importing for the strategic purpose only. Now coming to the low grade, yes, I do agree the grade of the iron ore in India is now coming down, and coming down not in the sense of the Fe content, it is coming down in the high alumina content, especially in Odisha region. Bearing this Chhattisgarh region, where the iron ore Fe content is higher, and some part of the Jharkhand also iron ore Fe content is there with the lower quantity of alumina. So there the steel makers, those who are port-based steel makers, they are importing. If you see that this year the iron ore total production may go up to somewhere around 285 to 90 million ton, out of which import will be somewhere expected to be 12.2 million ton, 12 million ton rather. So it is not that high. Now, to whatever the low grade iron ore, the second part is that it is not the import due to the low grade. But yes, I do agree there is a high grade iron ore. If the alumina content in the iron ore is less, then it will facilitate in the blast furnace operations. For that, we need to go for the investment, we need to go for the beneficiation processes, which we are not doing it now. We should go for the more and more of beneficiation to get the high grade ore. And what Mr. Puneet ji has told, that the producer must be now thinking of producing the high grade. It is absolutely not the mining methodology to produce the high grade. In that case, what will happen after few years? You will be left out with nothing, which cannot be used. So it is the time has come now to invest money for the processing, for the R&D, for the beneficiation, so that we can upgrade our ore and utilize those ore, and there will be lesser consumptions of the ore also.
So like NMDC, and you have highlighted that there is a strategy. I would like to ask from Rajiv and Mr. S.S. Mohanty, what could be that strategy? Why companies are importing? Is it the price or is it the availability? What could be the strategy?
So maybe thank you for this opportunity, Monica. Should I go first? Am I audible to all?
Yes, please. Yes, please.
So if I look at the trend for imports of iron ore, last year, FY25, we imported almost 6.5 million tons. And this year, till February, the imports were around 9.4 million tons. And primarily, the imports, as was mentioned, is from Brazil. Then Oman is another country, and then Australia, etc. From our iron ore perspective, if I look at pellets, last year FY25, the total imports of pellets was around 0.4 million tons. This year it is around 1.9 till February, so it's going to be around 2 million, of course, and 87% from Oman, and then of course UAE. So I think a couple of areas that have been mentioned by the other panelists is of course strategic reasons, but I think more importantly is probably the cost in terms of the logistics. Because I would say that moving the iron ore through the, I would say land, it is, on a higher side, the landed cost versus bringing them to the, and these are primarily imported by the coastal based steel plants. Now, if you look at this 1.92 million tons, it will landed at Kandla and other kind of ports. So clearly, I think logistics and the cost, landed cost is one of the major drivers for this, the strategy.
Mr. Sashi Shekhar, sir. Rajesh, we will just come to you.
Yeah. I think every panelist has spoken their views. First of all, we must admit that Indian iron ores are not, that rich ore that unlike you get from the other countries like Brazil and other or Australia, etc. But the fact remains, India has got sufficient ore for the production of steel as of today. I know you are all fully prepared to take care of the requirement of steel. Iron ore requirements for steel. So reason is, I think that rightly said by our ex-director operations, that OMC, that the time has come now, instead of importing the from iron ore from outside, whether it's in terms of pellets or in terms of iron ore, it's just now the question of how to emphasize the beneficiation part of it. There can be a strategy, but I think our as a lookout for the nation, for every country, to really feed to the steel producers is both from the government and from also the private sector side, to really give an importance to the beneficiation, so that a requirement of the steel producers are met, and we avoid the import of iron ore. That's what I.
Rajesh, you wanted to make a comment? Please,
Yeah, so Mr. Mehta mentioned about the cost of the imports being lower. I think actually it's higher. Even for the port-based consumer landed to his plant, it would be higher the way the imports are happening. The records are there in the public. NMDC, OMC, our prices are well established and well covered by so many publications, and so is the import prices. So I think the strategy would be a little different from pricing alone. Pricing is not the reason. In fact, if pricing was a problem, then the Indian prices would be at least 2,000, 3,000 rupees higher than now. Number one. Number two, on the pellet front, the import is, again, Mr. Mehta mentioned Oman, I mentioned Oman. whereas Oman imports nothing, produces and exports zero pellets. Right. So I think the Omanis mystery can be solved by the politicians of America and Iran, but not by us. So those are the strategic reasons as far as Omanis pellets are concerned.
Yes, Puneetji. Please unmute.
You know, it's very interesting. Even as in our association, we've been really concerned about the import of pellets when India is actually got substantial pellet capacity. In fact, we're running currently at only about 65-70% of our installed capacity, and we're absolutely equipped to take care of our domestic demand. But unfortunately, this pellet that is coming, number one, is obviously of a slightly higher grade. Therefore, it is being imported. And most importantly, the topic of Oman. We're all aware that yes, Oman does not export pellets, and it is believed that this is Iranian pellet. And one of the major concerns here, which Rajesh has correctly mentioned, that needs to be investigated by our government is that we had signed a comprehensive economic agreement with Oman, where we are importing duty free. Whereas if pellets were imported from anywhere else, it would have levied a 2.5% import duty. So is this duty evasion or what is this is something that needs to be investigated. And when the country itself is running at a lower capacity, when the country is equipped to supply the pellets for our demand, there should be absolutely no reason for this import of pellets.
So I want to raise a point that the most of the iron ore mines are on the east coast, as in eastern belts, whereas the steel manufacturing are on the western side. When we talk about the pricing of material which is being transported through ferries to east to west versus imported iron ore and pellet, how do you see that? Because for the steel plants, what they are saying, it is very economical. I'm coming to the point from where let's talk about the beneficiation. Currently, India is having about 132 to 135 beneficiation capacity. And मुझे लगता है numbers आप लोगों को ज़्यादा better है how much we are actually doing the beneficiation. I think about 35 to 40 million tons we are beneficiating the ore. And coming to the point on the beneficiation, then converting into pellets, the margins are going up, whereas when you are transporting it to East Coast to West Coast and then getting it imported versus getting it imported, how do you react to this? Yeah, Puneet,
So
you
let
can
me,
make
yeah, let me jump into this. So you're right, Monica, that beneficiation capacities, again, we do have beneficiation capacity of close to 140 million tons, and we're operating at only about 40-45%. Again, while Mohanty ji from OMC has mentioned that the industry needs to look at R&D and beneficiation capacities. I think while a steel manufacturer should be focused on beneficiation, I think it's extremely important that miners are also focused on beneficiation. And beneficiation is a very when it comes to the technology, I think there are technologies available today. So technology is not a problem. I think the government needs to step in here and have certain policies which makes it easy for beneficiation. Today, the pricing, because of the export of lower grade iron ore grades of lower Fe below 58% is being exported. That availability at a reasonable price is not there for the domestic market. That is what is causing these beneficiation plants to run under capacity. So I think this is an area which needs to be looked into.
Anyone else want to make a comment on this?
Monica, here what Mr. Puneet has told, the beneficiation and beneficiation capacity. In my view, yes, government needs to step in. My view is that, or my suggestion will be that while now it's auction regime, while auctioning the iron ore block, which is maybe at the level of 55 to 60% Fe content, or maybe higher alumina content, it should come as an embedded with the condition that you have to go for the value added or you have to go for the beneficiation first. And there itself, the incentivization should be there. Like in our MMDR Act or auction rule, you are giving him the 5 years time. So you give him a 5 years time for the operational purpose, another 2 years or 3 years time for the making of the beneficiation. And once he gets the beneficiation, you may give him the royalty benefit on other DMF benefit on that. Because by doing the beneficiation also, he is employing the manpower and doing other things. So we give him the incentivization, be it a mine owner or be it a steel plant. So that is how the beneficiation can come. Even while auctioning also, whoever the taker or bidder for the auction, this should be embedded there. Value addition is a mandatory, may not be pellet, maybe up to beneficiation for the low grade plant, low grade blocks.
Sir, but about 80% everybody are doing up to that threshold. And I want to raise a question. And so what is the role of IBM when we talk about if we have to cut down on imports? What role IBM can have on it? Or, average sales price, on that part?
The average sales price, IBM is the only technical sale, although under which there is a statistics department which does the average sales price. The average sales price, there is nothing much to do it because it is determined from the, as on today's methodology, it is determined from the sales price of big mine owners and they get the from their returns. Now, can it be linked with there are many things, many methodologies are being under considerations, although it is like mineral index. For the base metals, for aluminum and others, it is LME. So like that, if some index can be determined, which will give the average sales price. So average sales price, again, it will not be making you to go for the beneficiation. Ultimately, it is the result of the price, weighted average of the price. So that methodology needs to change for the calculation of the average sales price. Mineral index is one of the methodology like LME for bauxite and others. But role for the restriction in the import, yes, IBM has got a role for that. IBM can reduce the threshold value which is going on that. Now, even in IBM also, the value addition part can also be a restrictive, can also be a condition in that IBM mineral conservation part. But that is the sale which does the mineral conservation, deals with the mineral conservations. So IBM directly is not a regulator, so it can put the condition there. It can facilitate government for putting that condition.
Anyone else want to make a comment? All right. So I'm raising up. Yeah. Yes,
regarding
sir.
beneficiation, the government has had 3 or 4 committees and set up committees, whereas various options and suggestions have been made, including compulsory beneficiation, like Mr. Mohanty said, reduction of royalties and other benefits that are possible. I think the government is under consideration of all of this, and if that is pushed in a timely manner, a lot of the low quality iron ore which is exported by the miners because there are no Indian buyers. And what Puniji said that because when you transport the ore, it becomes unviable for a off-site beneficiation plant to run it. So if those policies are expedited and implemented, it will be very, very beneficial. And the exports, which have, of course, gone down from 46 million tons to 21 million tons this year in 6 years, exports will stand dramatically reduced even further. And while speaking on the subject, the fact that 46 million tons has come down to 21 million tons, whereas the grade of iron ore has actually reduced, that means that the Indian consumer has learned how to use lower grade iron ore to the extent of this material, as well as newer material that is produced of lower grade. So that has been happening. It needs to be expedited to ensure that there is no mismatch in supply demand.
So I wanted to touch upon, on iron ore production and steel production ratio. So I have a pre-COVID level 2021 numbers with me. That time we were producing about 230 million tons of iron ore. And during that period, we had about 151 million ton of steel capacity in 2021. If we talk about today, as on 2026, the iron ore production has gone to 289 million tons from 230 pre-COVID level, and the steel production has gone to 210, approximately 210 to 215 million tons. And currently, every miner is producing about 80% of their capacity. Every miner is producing iron ore about 80. So, what is the way? How do we increase iron ore production? If you compare the numbers, comparing iron ore production versus steel production, the way steel capacities are going up.
You're talking about the availability, isn't it?
Sorry?
Basically, you're talking about the availability.
Yes, yes. I'm talking about the availability, comparing iron ore production versus the speed of steel production capacity is going up.
See, the whole purpose of both the governments, both for federal and state government, I mean central and state governments, have been, and also everybody in IBM talked a few minutes back. The policy, the purpose of IBM also to see that the iron ore production also goes up in a normal way. So I think every effort has been now put by every agency to increase the iron ore productions. That means the mines are available, and also the logistics are available to evacuate, and the infrastructures are also developed in terms of the ecosystem for iron ore productions. I think the what you are talking about 230 million ton and 151 million ton, 289 to 210. I think as you are growing up, you must be seeing this so many of iron ore product mines are being auctioned, but not brought into operation as expected, as desired. Okay, there is one of the reason why the iron ore production support not matching like that. Otherwise, if you see the number of mines auctioned, the capacity expected to come from those mines and iron ore produced or iron ore operations is less. This is one of the reasons you must understand, and that's why we believe that ecosystem has to do. When I say ecosystem, I believe not only the infrastructure. I believe this regulation part of it. There should be a, just like few months back we found out a law has come where the auction mine has to produce maybe within 2 to 3 years time. And others parents can correct me. That means you have to produce. I mean that is where the timeline has reduced from the 5 years to 3 years, something like that. So sometimes a type of a mandate
तो ये
or type of a
एक
penalty.
order भी आया था 17th of October 2025. Are you referring to that order?
I think yeah, exactly. If I others can correct me, but it has come very recently that the production of auction mines has now kept an advantage that if you are able to produce much early, then you get an advantages. If you do not produce, there is also time of a penalty or you lose your interest, lose your deposits to some extent. So that I'm not telling that it's only that law. I'm talking about the ecosystem as such has to be put in such a way the mines which are auctioned or mines which are number one, the mines should be auctioned to be put in production. Number two, more mines to be auctioned. That means availability of iron ore has to go off. And number three, and as I said, there are a lot of many ores which are not being used, being produced, but because of low grade or other thing not being used to the steel products. That's what the beneficiation plant comes. So like that, many of the ways by which the ecosystem can be further strengthened so that iron ore matches with the steel requirement.
Rajiv?
So,
Yeah.
sorry, if I may. No,
Yes, please go
Rajiv
ahead.
ji, please go ahead.
No, I think Mr. Mohanty spoke about some of the issues. So some numbers for all of you. The total production of iron ore in FY22, which is just after COVID, was around 254, whereas the production now is around, last year was 289. Demand at that point of time was around 200 compared to 256. So whereas if I look at almost 1/5, 20% has gone up, but the production has not gone up. So there are several reasons. One of the issues that Mr. Mohanty highlighted, since 2015, 152 blocks have been in auction for iron ore. So far, the 108 of those blocks are yet to become operational. I mean, those blocks which became operational were primarily from Odisha, around those are brownfield, those are kind of handed over. So that is one of the reasons. The other reason is, of course, in the auctions, there were high premiums and some of the miners, they couldn't, operationalize or start the block. So that's also an issue. The third issue is around, of course, the resource depletion and in terms of the grade going down and so on and so forth. It was mentioned by the panelists here. So I think these are the few facts. And of course, as Monica rightly mentioned, today the crude steel capacity is around to the tune of 205, 210 million tons. Production, the last year it was around, the production was around 152. Pre-COVID, it was around 110. So the steel production as well as the demand of iron ore has gone up significantly, almost to the tune of 50%, 45 to 50%, whereas the iron ore production has not gone up to that extent.
Rajiv,
So just to add on to
Puneet.
this, Monica, just to add on to this, so if my information serves me correct, steel has been growing at a pace of about 10% year on year, whereas iron ore production is increasing only by about 4% year on year.
Absolutely.
So this is that gap which needs to be met. And I think we have that capability. This gap that is there is not because we don't have the iron ore. This gap is there because we need to fast track and ensure that this iron ore is in the market. Once again, I don't know if I'm correct or not, but as per my understanding, we have close to about 450 million tons of EC capacity available today, of which we're mining only 280, 290, or maybe 300 million tons. So this 150 million tons that is available, we have the EC, but is not being mined. So this is what needs to catch up. This is what needs to be brought into the market. And we are at par with our steel demand and iron ore availability then.
Yeah, I think Puriji rightly said 9.7% is the crude steel demand growth, CAGR over the last 4 to 5 years. Whereas if I look at the iron ore production growth is around 4.4%. The demand growth is around 12.6%. So clearly, I think there's a gap, demand versus supply, which is creating the issue.
Right. Rajesh, you want to make a point?
Yeah, the gap between the EC capacity and the actual production of 150 million tons is, Mr. Mehta can probably correct me, but much of this capacity where the EC is received and all permissions are received is 150 million tons, out of which I would say substantially is with the private miners who are also consumers of the iron ore. So they themselves are not producing fully. So if there's a shortage of iron ore, so-called, I don't agree that there's a shortage because there's still net exports. If there's a shortage of iron ore, is because the miners who are also producing steel are not producing enough. They're allowed to sell quantities, they're allowed to export, and they're allowed to use. They're not producing that fully. The reason of that is probably the higher premiums that they have committed. They're not being charged. These are voluntary premiums bid by them, and that's the reason that they cannot afford to sell it. So that is an anomaly which only the bidders who have bid for that can understand and accept and go on. Last week there were two mines which are auctioned by one of the largest producers of taken in auction, both in Odisha at 110 and 115% premium. So if there's if the average sales price is around say 4,000 rupees for 64%, they've committed to pay around 5,000 rupees or 4,800 rupees to the government. So the incentive for them to go away to produce more is already gone by this. So I think that's the anomaly that I'm talking about.
So all in all, if I summarize this
Monica,
aspect,
Monica, I have got a point here. See, the auction regime has come in 2015. Rather, first auction was somewhere around 2016, 1st of March or something like that. So from 2016 to 2020, there are very less blocks are auctioned, iron ore blocks. All are almost either in Karnataka, those are small blocks, and in Odisha, three or four virgin blocks are auctioned. And after 2021, once all the mines lapses their validity, so the auction, it is auction takes the pace. Now there are two types of auction. Auctions are for the greenfield, auctions are for the brownfield. I mean, it's for the running mine, those who are validity has been lapsed. So for the greenfield, at such to make it the operationalization, it takes 5 years. So to get those mine more faster availability to the material in the market for the faster, your this clearances part has to be taken care of. It takes 5 years minimum, 3+1+1. So none of the cases you'll find that government has not given the 2 times extension as per the rule. Now what SS Mohanty sir was telling, that rule, that is basically for the 2 years from the date of execution. So if a greenfield mines get executed in 5 years, which is the maximum time limit, before that it is very, very difficult in India in today's conditions. So you are giving another 2 years. So 5 plus 2 is the 7 years is the minimum gestation period to get the material in the market. That is the first part for the greenfield project. So that is the reason that if you see the very few greenfield mines are under operations now.
So
Now
if
coming to the
coming
to the auction for your operating mine, there is a catch there. It is already, if you produce, you have to produce 80%. So you are thresholding, you are limiting yourself by 80%. These are already all are high premium mines. Why people will get any incentive to produce in more than 80%? So you are already lagging by 20% there. So now for that 20%, government has to intervene. You have to incentivize. If you produce 80% in block wide, 80, 85, 99, you get the benefit in the premium. So in that way, government will also earn by volume, and your material availability in the market.
yes,
The
Rajesh.
incentive, the incentive or lack of it is there in the auction that they have bid for. So how can the government go back and say, okay, you have bid for 120%, but you get lesser? The day that happens, then all the bidders who lost out on the bid will stand up and say that incentive should have been offered earlier.
No. I'm not telling that incentive in the bidding. I'm telling, suppose there's a cap, you produce 80%. You have to produce minimum of 80%. So if you produce beyond 80% in the directly, now you make a rule that if you produce beyond 80%, instead of penalizing, you will get the incentivized.
No, penalty for producing beyond 80%, sir.
Yeah. Or maybe in royalty benefit for that.
There's no penalty. The premium is not a penalty. The premium is a self-paid. So
No, I'm in complete agreement with Rajesh ji here.
So they cannot, if today I am a bidder for one of the mines and Mr. Arya is another bidder, he has bid 120% and I bid 110% and he gets the mine. Right? Tomorrow the government says, okay, for more than 80%, ensure 120%, he pay only 80%. I will go to the government and to the court and say, this is beyond the scope of the original tender. So it is not bona fide.
Not the old tenders. You make a rule, it cannot be retrospective.
So,
but then,
so there's an easier way to do this, that the people don't bid 120%.
Correct.
They pay 120% up to 80% of their EC capacity.
No, they just don't bid. If they feel that it is not they're not incentivized to produce 100%, they should not bid 120%. No? They should bid only 80%.
If I may add to this, I think a lot of our panelists have, or rather, few of our panelists have mentioned that high premiums is the concern why iron ore is not available. Out here, I'm in complete agreement with Rajesh ji that this high premium has not been enforced upon winner of a mine, a participant in the auction. These are figures that they have voluntarily chosen to bid. These are issues that have been going on for the last or from the date of the first auction till today, and participants are still choosing to bid premiums of up to 150% or maybe in some cases even more. So we cannot today say that it is high premiums which is the problem. People are willing to pay that high premium. It is the policy where, in my opinion, personal opinion, this limit of 80% should be removed. You should be mandated to mine 100% of the mine, 100% of your EC. You should be restricted from purchasing iron ore from the market beyond the capacity of the iron ore that you already have. If I have participated and I have got a mine of 10 million tons, my requirement is for 20 million tons. I should not be able to buy more than 10 million tons of iron ore from the market because I have a 10 million ton mine. So this is what needs to change. The premium percentage is my choice. I can go up to 200% if I want to. So I cannot say that it is the premium which is the problem. This is my comment on this. I think this cap of 80% needs to be removed and taken up to 100%.
So what is your suggestion? What kind of recommendation you want to make this 100% production from 80%?
Well,
What are
the
your...
government just needs to say, if you're going to participate in the mine, you need to go 100% capacity.
And that would not allow for any failures of any kind whatsoever, which is not a very practical solution.
Correct.
You have rains, you have accidents, you have mining issues, you have logistics issues. So that's why the government gave 80%. The people who are bidding, who have mining, that 150 million tons gap is what has to be understood. It is not a policy gap. It is a it is sitting on the mine. Let's accept it. It's
I
squatting
want
on the
to
mine.
take a little break to launch a poll for our audience. So the questions are in front of you. We have 5 questions. So I request all of our audience to start voting. So the first question is, do you believe India's iron ore production will be sufficient to meet the country's growing steel demand by 2030? You have options like yes, production growth will be sufficient, or supply may remain tight in some regions. India will need higher imports of certain grades, or too early to say. The next question on your screen is, what will be the biggest driver for pellet demand in India over the next 5 years? So your options are expansion of integrated steel plants, growth of DRI sponge iron sector, export demand. We have question number 3 in front of you. Why do you think India continues to import iron ore pellets despite being a major producer? You have the following options in front of you: lack of high grade ore in certain regions, logistics and freight challenges, cost competitiveness of imported material, processing and beneficiation gaps. Fourth question on your screen is, how do you see India's iron ore and pellet export evolving in the next 3 to 5 years? You have the
No,
following.
there is no screen, Manika. You change the screen.
So it is visible to our audience, sir.
Okay.
It's an audience poll. Yeah.
Okay.
So the options available for the audience are: exports will increase significantly. The second option is exports will remain stable. And the third option is domestic demand will reduce exports. And the fourth option is depends on global market condition. Audience, you have question number 5 on your screen. What is the biggest challenge for India's iron ore industry today? You have the following options: logistics and freight cost. Second is mining regulation and policy uncertainty. The third option is quality of available ore. And the fourth option is global price volatility. So to our panelists, these questions, poll questions, are only visible to the audience because we want to take their feedback. So while they are responding to the poll, I want to straight go to my question to Rajiv. Rajiv, global geopolitics and conflicts are increasingly influencing raw material trade and energy prices. How do you see these geopolitical developments impacting iron ore trade flows and pricing?
Yeah, I think thanks. That's a very interesting question. So I think if I look at some of the major factors which are shaping the iron ore and pellet supply and trade globally, of course, on one hand, you are seeing the decarbonization of steel making and, of course, growing adoption of these, I would say, the high-grade pellets in certain, regions. The second is, of course, there's also emergence of new iron ore supply zones. Like West Africa is becoming a major source of seaborne iron ore trade at this point of time. And last is, of course, more importantly, the geopolitics, the conflicts and the trade disruptions that are impacting some of the global trade. So clearly, I think if I look at the two conflicts which are happening today in Russia, Ukraine, and Iran, there are 3 areas where we are seeing tremendous influence. One is, of course, the supply chain disruptions. So, for example, Ukraine, 15 million ton pellet exporter prior to 2022 has seen export decline. And with iron ore also, shipments falling almost 45%. That is impacting supply. Iran's exported almost, Iran is also high, in terms of pellet. They supplied 9 million tons of pellets to China in 2025. That is also, we'll see that a trade for realignment happening after this conflict. And more importantly, if I look at from a freight impact, there's an oil price which has gone up. The freight costs have surged by almost 40%. And we're also seeing bulk carrier shortages, and because there are a lot of cases we have heard, different companies saying that the vessels are not available or vessels are delayed, which have disrupted the dry bulk trade. And lastly, of course, the war risk insurance premium have also risen to the tune of 1%, thereby increasing the overall logistics cost. So what we are going to see and what we are seeing at this point of time is, of course, the closure of the Strait of Hormuz, which has impacted almost 18% of global pellet exports from Iran and Bahrain. So one is the supply chain, the second is the trade for alignment that we are seeing, and the freight impact. These are the major areas we are seeing that will happen and that are impacting this geopolitics going forward.
So I want to raise one question to from the export point of view. Now, since due to the geopolitical situation, the imports of pellets have reduced or significantly, it's not coming now. Does it opens the opportunity for Indian exporters when we talk about iron ore and iron ore pellets both? So you can answer one by one.
So,
Yes.
on the export front, the Indian iron ore and pellet exports has come down in the COVID year from 60 million tons total. Net exports, that is export minus import, 60 million tons has come down to 15 million tons. This year, the total export is around 25 million tons of iron ore and pellet put together. Pellet has come down to 4 million tons, 1/3 of 2 years back. So the reason is that there's a bigger and better market in India. We are an exporter of iron ore, of pellets. We do not export much iron ore or hardly any iron ore, but we are an exporter of pellets, and we always feel that the Indian iron ore pellet market is better than the export iron ore pellet market. The premiums internationally have come down. With that, I think geopolitics wise, I would never want to take advantage of any disaster like a war. And anyway, if the international market goes up, so does the Indian market go up. So I think at the end of the day, that has no impact on the actual export figures. I would think. Mr. Maitra mentioned about the West African ore capacity coming up around 100 million tons. That's a capacity, not the actual production. Of course, we also know internationally from 62, the grade has now become average of 61. That 1% decrease in grade means around 3% increase in iron ore consumption, which is more than the 100 million tons that West Africa will be producing of the sea trade. So around 2 billion tons is 2.5 billion tons is traded. 3% of that is 60-70 million tons, which is what the African production will happen in the next 3 years. So it's actually neutralized, and that's not going to have any effect on the overall supply balance of the sea trade.
Shekharji and Puneetji, you see some export opportunities opening up for India right now?
I think what Mr. Rajesh has told, the fact remains that 2-3 things, very important things to observe. One is the entire across the world, the richness of Fe or iron ore quality is coming down. Is a fact. Now to get a very rich ore, any part of the world also very difficult. So first accept the iron ore richness is coming down, entire world. Number 2 is China as such today consumes almost 67% of the iron ore pellet market from that is not exported. What Mr. Rajesh said, it will continue to increase the export market of pellets and become a export hub of the entire pellet markets. Because try to understand, if the world is growing in steel, let's say both in China and India, mostly India now and China later in the growth rate, and both the countries are not geared up to produce DR grade pellets which world is looking for. Okay. And DR, EF route of which is the best route for decarbonization of the steels. The three important principles we've observed. When the growth of the blast furnace grade turning the international market, try to understand with the freight rate also, it become a delta becoming almost sometimes negative. You do not get even the margin that you get from the BF grades. It's only DR grade which there is a margin. And of course, and as I said, DR grade also, China is not the market right now. So you have to again go to the MENA region and maybe in the Japanese and South Korea and those regions and Vietnamese when they go up for the DR grade. So coming to your question of, I mean, I'm not bothered about that war will continue for how long and because this is a cyclical economy and steel has been a volatile market all throughout. I've seen almost 5 decades of my career in the volatility at least 4 times. So every decade we've got a volatility. And I can tell you this frankly that the DR grade pellets markets is growing off today or tomorrow. We are not producing because we have not necessary fuel required for this. But gasification, coal gasification, etc. These are the point. But we are yet far to reach that space per which other countries are putting up because of the gas is cheaper. Whether it's North America or whether it's Canada, whether it's
ठीक है सर, मेरे को थोड़ा shorten करके बताइए
so I
to
believe
my
that at this
question,
point of
please.
time, Monica, with having all these four principles to be accepted, the export market from India will continue to remain so. It's not going to increase or decrease because China still continue to do that. If at all export market has to go up, it will be DR grade pellets, provided you produce in the economic rate and also freight it and getting that delta is required for the exporter. Thank you.
Puneet, sir.
So Monica, I think a couple of points I have to mention here. The total global trade of iron ore last year was around to the tune of 1.5 billion tons. That's the number that we have. And out of that, 1.56, and out of that, almost 79% was, imports by China. So clearly, I think China, and of course, 34% of pellets was imported by China. So China has a very significant play, and how the Chinese steel industry is going to play out in the next few years will also depend on how this the seaborne trade will happen. The second point that I want to say is that because of this geopolitics and the conflict, 20% of India, there's a significant amount of DRI capacity is gas-based, and they may see some disruption due to the LNG shortages.
Yeah, Puneet, I wanted to hear from you
Right.
on pellet and iron ore export opportunities.
No, so most of the panelists have put everything into the right perspective. While currently, yes, there is a temporary disruption because of the West Asia sea freights, the sea route rather, not just the freight, but the sea routes being disrupted. And like Mr. Maitra had mentioned that Iran was supplying most of the pellets to China. So while temporary, there might be a certain surge in demand, or not demand, a certain surge for an opportunity to export from India. It would eventually boil down to the economic viability. India, we are well placed in India. We've got a substantial demand. We are catering to the entire domestic market right now, and export viability even today is not that interesting because sea freights have gone up. And while the demand might for a temporary period might come up, but I think we are better positioned to supply to the domestic market than for exports.
I want to ask Mr. Prasad, so now since you have achieved 50 million tons, what is the next target for NMDC?
Monica, this financial year, we may end up after 53 to 54 million tons production and dispatch in the same levels. But actually, in line with the national steel policy, we are targeting 110 million tons by 2030. major portion will come from Chhattisgarh sector only. 93 million tons we are targeting from Chhattisgarh sector. And the logistics side also, we are actually aligned with the railways, and we are working with railways also. This KKL doubling also going to complete by 28, 29. And we are hope actually we will reach 1 million tons by 2030. And our share will increase to 25%. We are expecting to increase the share of NMDC inward share to 25%.
Prasad ji, if you could tell me, when we talk about the pricing of iron ore in India, it is generally influenced by both domestic and global factors. How do you see price discovery and market transparency evolving in Indian iron ore market?
Madam, pricing NMDC side actually, we are actually not only considering actually demand supply. We are all the factors we are considering. We including actually steel prices and sponge iron prices, and actually by considering all the prices, industry acceptable prices only NMDC is doing, but actually fixing the prices.
I want more comments on this, on price discovery from other panelists also. If you'd like to make a comment on this.
As far as Lloyds is concerned, we have a policy of, like Mr. Prasad said, looking at the costing of the consumer and making sure that is there. If you were to look at import parity, the pricing will be at 2,000-3,000 rupees more. We are not looking at import parity. We're not looking at export parity. We're looking at the Indian market, the viability of the product at each location. And we are one of the unique companies which actually gives the iron ore or pellet to the doorstep of the consumer with logistics included.
As far as OMC is concerned, actually, Monica, they have got a very robust system for price discovery. What we do there in OMC, we don't see the international price. We see basically the price of the steel and price of the pellet, and then see who are our customer. Then we have done some regression. These are my customer, and what will be my landed cost there, at what price there, and what is their production cost, and what is their selling cost, and how much percentage he will earn the profit. Certain percentage of profit is being given to that. It is inbuilt. Certain percentage of profit for my customer is inbuilt that within my floor price. Then price is being floor price is determined. So it is not the price is basically mix of market of the end product and the profitability of the end user.
I want to share the results of the polls. So we had 5 questions. The first question was, do you believe India's iron ore production will be sufficient to meet the country's growing demand by 2030? The majority of people, 39%, voted on supply may remain tight in some region of iron ore production. While the second highest was, yes, production growth will be sufficient. Our next question was, what will be the biggest driver of pellet demand in India over the next 5 years? The maximum voting has gone to expansion of integrated steel plants. We had the third question. Why do you think India continues to import iron ore pellet despite being a major producer? The maximum answer has gone to processing and beneficiation gaps. Fourth question was, how do you see India's iron ore and pellet exports evolving in the next 3 to 5 years? We have got almost equal voting on 2 answers. Domestic demand will reduce export and depends on global market conditions. And the last question what we had for the audience was, what is the biggest challenge for India's iron ore industry today? The maximum vote on challenges has gone to mining regulations and policy uncertainties. I want to take up another question. Do you see any direct relations between export of iron ore and pellets versus iron ore production in India?
Repeat again.
So my question is, do you see any direct relation between export of iron ore and iron ore pellets versus iron ore production in India?
Both are related to each other, isn't it? I mean, there is no debate on this. If you're not producing iron ore, you don't export, first of all. You do not export the pellet also. And so iron ore production is completely related to this. But right now, the approach should be of an Indian businessman or Indian, the pellet producers or iron ore producers should be, to first take care of the need of the in Indian of our country itself. That means we are also requiring more, iron ore, more pellet. Why pellets? Because I think you will not get the desire for the your carbon content, your CO2 extent emission. And just now, Minister of Steel has take out a taxonomy on the green steel. You must have seen that to achieve this, the first 5 star, and you need to go down below 1.6.
Sir, एक
Okay.
quick question और पूछना है मुझे. Should
हाँ.
IBM start publishing lower grade ASP as well, that is below 45 degree, 45 FE?
Yes.
So far,
Yes,
45 FE.
Rajesh. And more comments on this, then we will end
Yes,
the
sir.
webinar.
Yes.
I think 45-degree less that we are now utilizing as a part of our land fillings mostly. And today, if you look for, there are 30 ores, and depending on what type of ore it is, what type of character ore is. If it cannot be separated out in your 35, you want to spend monetization per ton of your, the cost that you get to get you spend in the beneficiation will not be, a viable proposition to sell in the market.
So one
It is viable if you beneficiate it. It has been done around the world, and we at Lloyd will be doing this within 1.5 years. So it has
You
to
are
be
talking magnetite
beneficiated.
ore, Mr. Rajesh.
No,
That is
no,
there
not
is all
magnetite, not magnetite, not hematite.
so
Mm,
so I think
even
I think
yeah,
IBM
please go
should
ahead.
start publishing the below 45 now.
so Monica, I think here is an important question. I mean, globally we are seeing upgrading of low-grade iron ores to pellet. For example, US taconite is one of the major ore there. It's like 35-40%. If you look at Minnesota and other regions, they are producing pellet from there, and they are starting some of the mines. Even Brazilian ytterbiumite, that's also very low grade. So globally, I think there's a push towards converting
So
low grade ore to
what
pellets.
should be the last cutoff for Indian lower grades?
I mean, the research and showing that what I think Mr. Rajesh said, they are doing something on their BHQ or something like that. But I think the question is, we are not fully geared up at this moment of time. I don't know any of the steel producers. They are still on the scale for getting a beneficial
In
circuit.
India, in China, 600 to 800 million tons is beneficiated, both hematite and magnetite. From 32, in fact, even 28, magnetite is beneficiated, but 32, 35%, hematite to 66, 67%, 64% beneficiation is happening and is possible. The technology has to be imported, or you can come to us. We can sell you the technology within 2 years after seeing proof of concept.
I'm not denying the fact that it not be developed. It is basically at the time of commercial level, it will take time to come off. I believe that it should come off, rather as a part of the country's interest, and exactly you're looking for our entire steel industry.
Yes, Puneet ji.
So Monica, you asked whether a grade bracket below 45% should be declared as ASP. In my opinion, the answer should be yes, because on one end, we're talking about development and a push for beneficiation. So in such case, I think it becomes extremely important that lower grades also have their average selling price and a royalty factor to it, because that will define the price for that. Today, even if I have the technology and I'm going to buy 45% Fe iron ore, what is the royalty that I'm going to pay on it? Am I going to pay for above 58, or am I going to pay for it at 45? So I think it is important that royalty brackets and grade brackets of lower grades is also applicable.
So I believe this is it. And before we close, we had some questions and comments which I will just read out, but it is not required to answer it. We had question from Mr. Deepak Radu. He asked from Mr. Rajesh Gupta. Maybe you can connect offline after this. In such a large, Lloyds is a large player in the pellet market. How do you ensure protection and visibility of pellet movement across the entire supply chain. Then we had a next question from Chinmaya Das. What are the strategies to handle high LOI Odisha iron ore fine for pellet production without loss of productivity? We had a lot of anonymous questions where people did not want to mention their names. So they were asking why our mills are not sourcing domestic pellets, and then isn't the auction premium inflating domestic prices the real reason for rising import? We had a question from Mr. M.V. Subbarao. Mines which are allocated through auction route, are they operating at full EC capacity? We had one anonymous comment. Miners are facing a lot of hurdles in approval process, specifically the forest approval are delaying the obtaining the EC. So which in turn the mines starting getting delayed. This shall be addressed by the government level. We had a comment from Mr. Meher Kuchi Manchi. To meet the steel production target of 300 million ton by 2030, we may need approx 450 to 500 MTPA means existing iron ore production needs to be doubled in the iron ore mining industry geared up to meet the demand, considering logistic bottlenecks, delay in operationalizing auction mine, beneficiation capacity gap. Again, we had anonymous, the major issue to import pellet for quality issues. Many pellet plant in India not able to supply the required quality pellets for steel making. I am fully agreed with Mr. Puneet ji. We had one comment from Mr. Shankara Raman. He's from IIT. Good evening. Within the next 2 or 3 years, how much inferior iron ore will be using in our country? Our team in NIT Trichy keen to see the inferior ores getting utilized. So with this, I really want to thank all our panelists for this wonderful time and this amazing discussion. I'm sure our audience have got benefited out of this discussion. I want to thank one by one to Mr. Puneet Arya,
Thank
President
you.
of PMEI and Managing Director and CEO of Arya Iron and Steel. I want to thank Rajesh Gupta ji, Promoter and Managing Director of Lloyds Metal. Mr. Shashi S. Mohanty, thank you so much, CEO and Managing Director of SR Minmet. I want to thank Mr. Sabyasachi Mohanty, former Director of Operations, Director Project Planning and Exploration at OMC. I want to thank Mr. KV Prasad, CGM Commercial and MDC Limited, and Mr. Rajiv Mehta, Partner Deloitte. Thank you so much. Have a wonderful evening. Thank you for joining on Saturday. And please have a cup of tea after the webinar. And we look forward to meet all of you in our Iron Ore conference on 19th of May in Goa. Thank you so much.
Thank you.
Thank
Monica.
you. Thank you so much.